Hello, this is Saurav. Our channel name is Tax Accountant. Here we cover tax and accounting concepts. So today I got this brilliant concept, which is a very simple balance sheet concept. So what does balance sheet mean? So balance sheet it's a sheet of your balances. So balances look at your asset balance, your liability balance, your cash balance, your assets balance, and bank balance, loan balance, and equity balance. So these are the balances. So this is, what is it? It's just a record of everything. And in this, the concept that I want to explain is the balance sheet concept. So the concept of balance sheet is very simple. So there will be equity, and equity must equal to net asset. Let me explain. So asset minus liability. Asset minus liability is net asset. So for example, if your asset is $10,000 and liability is $2,000, so net asset is going to be $8,000. So understand this concept in balance sheet so that you understand what is asset, what is liability, minus that is net asset, and that's equity. So what is equity? So if this is going to present in the balance sheet, simple form will be balance sheet, and the asset section cash will come $10,000, and liability section loan will come $2,000, and net asset will be $8,000, equity will be $8,000. So net asset is equal to equity. Now what is this equity? Might need separate video for that, but right now equity is as simple as that this is current year earning or retained earning of prior year. Equity is something which is payable to the owners of this business, and equity is something, what is it worth today? So this business worth today is $8,000, but there is the equity. Think about if you got a home loan and you got a home. So if your home is $1 million and your home loan is $500,000, so $500,000 is your equity, which means this asset has no liability attached to it, right? So this is a free money. This is called equity. Now if you need to understand the balance sheet, the concept of balance sheet is balance sheet will always be in a certain date. So date of balance sheet is important. This is the period where it ends, right? So in this case it's ending on 31st March 2024. This is the period is ending. In this specific case, there is no money in the bank account, bank balance is zero, assets is $800,000, and there is no liability. Everything is net asset, which is equal to equity. Slightly more, a small business balance sheet will look like something like this, where it will have, this is how it's presented. Assets, current assets, non-current assets, liabilities, current liability, non-current liability, net asset, equity. What is it? Asset could be cash assets, and anything can be converted into cash pretty quickly. That will be current assets. And then we have non-current assets such as property, plant, equipment, your fixed assets, your intangible assets. These will be non-current assets. Current liability, everything that I have to pay now, accounts payable I have to pay right now. The goods that I have purchased I have to pay now. The loans I have to pay, credit card bills I have to pay now. That would be your current liability. Non-current liability, okay, I'll take some time to pay that. It's not due straight away. It's payable over the years. So mortgage is payable over the years. Bank loan payable over the years. So that will be a non-current. So it's not immediately of my concern. And then asset minus liability is net asset, which is equal to equity. So these numbers are always equal. And what is the business worth today? The worth of this business is this much, 20,000. Slightly more complex balance sheet. This is a third form where it's always referred to the notes to the financial statement. Then we're talking about different concepts here, such as deferred tax asset concept will kick in. Deferred tax assets, right of use of assets, the lease liabilities. So those sort of concepts will kick in. But in a simple form, understand it still be the same thing. Current asset, non-current asset, which is asset, current liability, non-current liability, which is your total liability, and then you have which is equal to equity. Net asset is equal to equity. The reason we have these notes, because it's way too much information, and this is very comprised kind of report which is applicable by accounting standards, generally accepted accounting standards. So these standards will specify what will be the format. Generally all the countries will follow the same format and same process, in which it's easy for everyone to understand what it is. Because it's a lot of information they referred in the notes, so you have to read the notes attached to it. I'll cover another video in which I'll explain how to read these notes and how to understand the position of a company. If you want to invest in that company, what you should look out for, such as interest coverage ratio, net asset of that company, plus earning per share, and those sort of stuff. Thank you. Thanks for watching this video. If you like it, please share and subscribe to our channel. Thank you.